All right, everybody. So now we're joined with Commodity Research's Andy Lebow to break down the energy data. So, Andy, what did you see in the data?
Okay, thanks for having me on, Mike. The data I thought was, on the face of it, bearish, and looks like the market had anticipated it to a certain extent. As you all know, crude stocks drew by 1.3. I was looking for a 4.5 million draw, so wasn't right on that one. Gasoline built by 2.9. I was looking for a draw, so not a good week so far for me to start doing this. And distillate built by 1.2 million. I think I was looking for a slight draw. I thought if you look at the crude number, though, it really wasn't quite as bearish as may have appeared on first blush. The key to crude, first of all, two things that I thought were supportive. One was that the production was revised downward to 10.8. They made a big revision to the May numbers earlier in the month, and they're trying to catch up with that. So U.S. production falling, and I think, Mike, we're going to talk about that a little bit later because it's pretty important. The other thing that the EIA does is they have a fudge factor. And the fudge factor is called adjustments. That's when things don't really balance out. And last week they had a 700,000 barrel a day upward adjustment, and this week they had a 500,000 barrel a day upward adjustment. Now that's going to change as we go forward. I think looking at crude as we go through the next couple of weeks, we're still going to see some decent draws going forward. So, this week, yeah, bearish, but let's watch the next couple of weeks. I think we're going to see some nice draws still. On gasoline, the big build was because demand was revised downwards by 250,000, was marked down to 9.35 after like 3 great demand weeks. So it's not all that surprising that demand was, the 1 week was lower. The 4 weeks are still okay. Big import week, though. A lot of gasoline coming in, which kind of belies what's happened in the New York Harbor cash market, which has been pretty strong. But this week there are a lot of imports coming in, and as a result, gasoline had a build relative to a draw. Big picture, nothing looks that interesting in gasoline. It's pretty well balanced. It's actually above where the 4-year average should be. So the gasoline numbers, bearish. I've been looking at gasoline as neutral to bearish, and really nothing's changed. And on distillate, we had a slight build. There too, a big import number. Demand was okay, not great. Distillate looks pretty good still, even with the build. We're running around 17 million below the 4-year average, and I think distillate going forwards still looks pretty good. Finally, Cushing drew again. We'll probably see a couple of more draws in Cushing, and then it's going to start building. Cushing will start building probably, I don't know, this is August. This is the week of August 3rd, 10th, and 17th. We might see some modest draws. Then we're going to start building as we head to the end. And that's already, we see that already in what's happening to structure, the month 1 to month 2 coming off as hard as it is. The market's already anticipating that Cushing's going to draw. But meanwhile, at 21.8, it's low, but we already panicked over that a couple of weeks ago. So that's my view of the numbers. Bearish, but I'd look next week. I'm sure I'll be looking for another crude draw. I think we'll get it.
So, do you
And
think?
the other one last point, Mike, before you ask.
Sure.
Runs very high. I think it's a record crude run number. The amount of crude run through the refinery at 17.6 million barrels a day. That's 300 higher, and that's why we're going to draw, because we're running a heck of a lot of crude. through our plants. That again, that's a record, and that's why we're going to draw. Turnarounds aren't until September and October, so that's why I see still a decent draw coming up next few weeks.
So I was just going to ask you, what do you think is moving the markets right now? Is it the data or geopolitical combination? What are your thoughts?
I think it's probably a combination. These weren't quite as bullish as many of us had thought, but the market's really ratcheting here. I think it's ratcheting in my mind because of we're looking at a tremendous amount of uncertainty on the key variables to this market, namely, the two major variables, which are certainly supply and demand. I think any any analyst would be hard pressed to say they know for sure what Iranian exports are going to be. And similarly, any analyst would be hard pressed to say they know for sure what Saudi production is going to be. And, to me, they're both moving targets. I have this little scorecard of where I think Iranian exports are, and it just keeps moving, and the Saudi production numbers just keep moving. And then we have the uncertainty on the effects of tariffs. So clearly, there's a lot for the market to digest. And the last couple of days we had nice rallies, and now we're coming off. I think we may be in for a period of ratchet within a pretty broad trading range. It looks like to me.
What do you think, following up on that last comment, where do you think the Saudis would prefer to see crude oil trading? Like, based on what they're trying to do with a number of different geopolitical things, where do you think they want to see oil?
Michael, that is such an excellent question, because if you look at where things have balanced out here with the geopolitical situation, for every barrel that the Iranians don't export, the Saudis can export. They can make it up. And the key question for them is, we're almost back to where we used to be, where the Saudis were the swing producer and could pretty much pick a range of prices. They did this for years in the 80s and 90s, and they could pretty much try to pick a range. And of course, as they've lost over in this decade, in this century, they've lost power over that ability. Now they're there. They can do that, and to me, it might be 60-70 WTI, 65-75 Brent. So, somewhere in that range, maybe a little higher. Probably not a whole lot lower than those numbers. I think they've already shown by where the production is, they really don't want to bury the market here.
So you think roughly they're pretty happy with this figure right here?
Yeah, I think they are. And, they're looking forward and they're going, all right, we have the chance to export a higher volume. We can export higher volume. We may get a higher price. We probably won't get a much lower price. And this is really, and we're not destroying, but we're obviously having, it's at the expense of our enemy, Iran. It's really a good scenario that the Saudis are in right now. And I think you're right. Yeah, I think they're probably happy around here, a little higher, a little lower, but not too much lower.
Right. Oh, that's good information. And, finally, just want to wrap it up with, you mentioned yesterday there was a monthly EIA came out with revisions to their data. What are you thinking based on those revisions?
Well, that was pretty important number that the EIA threw out. They talked about, in May, they made a revision to the May number down by 300,000, and now we're catching up to that. And they revised down U.S. production down by 100,000 barrels a day, 140 actually in the second half, and in the first half, and next year also revised downward. Now, it's really important, if you look at these balances, for the market not to get really, really tight, which it it certainly could, for us to really come through with fairly good production numbers on both crude and NGL. So we've got to come through, and as the the Permian production now is running at like $17-18 under WTI. That's the West Texas crude for the Permian Basin. So it's not clear that U.S. production is really going to explode at the numbers that many of us had thought earlier in the year. And I'd look for the EIA to start revising those production numbers downward. That's pretty important. And the market's going to be obviously watching that very carefully, how we come through on production, because besides the Saudis, we're also have become a swing producer. But right now, ironically, the Saudis are the swing producer.
Yeah, that makes sense. So we'll definitely keep an eye on that. Okay, well, hey, thanks a lot for joining us. A lot of great information, and you'll be back. You'll be chiming in more regularly with some audio info on the energy markets. And so if people have questions, we can get some more information, things like that. But thank you for the information, and look forward to speaking soon.
Okay, Mike, thank you. Thanks for having me on.
Thanks.